Making investments is an absolute must if you don't want to scrap by living paycheck to paycheck. The beauty of investing today is that anyone with an extra $1,000 to invest can build a diversified portfolio that can generate serious profits while still being relatively safe and stable. Do you have any spare cash that you'd like to use toward your financial freedom? In today's video, we'll take a look at 7 strategies anyone can utilize to maximize a $1,000 investment. Number 1. Exchange-traded funds. Exchange-traded funds, or ETFs, have really grown in popularity ever since they appeared more than 20 years ago. ETFs are similar to stocks in that they may be purchased and sold during the trading day. A basket of assets, such as technology companies or the US stock market in general, can be held by an ETF. This is one of the ways it's comparable to a mutual fund. You can put $1,000 into a well-diversified, low-cost ETF, simply deposit it once and leave it alone. There are quite a few online brokerages where you may put $1,000 in an ETF for a manageable or even no fee. For instance, you can use an app like Acorns to invest as little as $10 at a time. Although experienced investors with larger portfolios might prefer other investment types, if you're a real beginner, you'll find ETFs to be very easy to understand and work with. Number 2. Mutual funds. Mutual funds and ETFs are quite similar in that they both consist of groups of equities with some minor distinctions. ETFs trade at all times throughout the trading day, whereas mutual funds trade at their own time at the conclusion of the trading day. Most exchange-traded funds have cheaper management costs and charges than mutual funds, which makes them highly desirable. One big difference with mutual funds is that they tend to have a minimum investment requirement. This could be more than $1,000, but some mutual funds, such as those offered by T. Rowe Price and Vanguard, can be purchased for less than $1,000. If you're trying to decide whether to invest $1,000 into a mutual fund or an exchange-traded fund, it's also important to think about whether this is a one-time investment or the beginning of a monthly savings plan. If you're able to set aside money each month, a mutual fund is an excellent option, especially if you're contributing to a tax-advantaged account like an individual retirement account or a 401k plan, which leads us into our next option. Number 3. Contribute to a Roth IRA. There are a number of advantages for new investors to opening an IRA. The biggest being you can build investment wealth in retirement without the government taking a big bite out of it. What makes Roth IRAs, in particular, so powerful is that at the time of withdrawal in retirement, the money is not subject to federal income tax, because you've already paid taxes on the money when you initially put it into the account. This means your account can grow tax-free, and after many decades of compound growth, it may amount to a sizable sum. Of course, if you want to amass a large nest egg, you'll need to contribute to your Roth IRA regularly, and that's true for a lot of investments on this list. To become wealthy via compound interest, you need to invest far more than $1,000 and hold on for the long term. But to get started, $1,000 can go a long way. Number 4. CDs or certificates of deposit. Because of FDIC protection, these investments are among the most secure available. You can never go broke investing in a certificate of deposit since the United States government guarantees your principal. The only real danger of investing $1,000 in a CD is that, should you require the funds before the term ends, you'll be subject to a penalty if you withdraw them early. If you put $1,000 into a CD with a 1-year maturity, you won't be able to withdraw it until the end of the term, or you'd incur a penalty equal to around 6 months' interest. If you're concerned about the possibility of needing the funds, a high-yield savings account may be the preferable option. Interest rates on CDs are on par with high-yield savings accounts. To remain competitive, though, some financial institutions also provide certificates of deposit with no early withdrawal penalties. You can access your savings at any time without incurring any fees. Number 5. Peer-to-peer lending. Peer-to-peer lending is a growing trend that allows you to make a difference in people's lives while also earning money. Lending money to those who need it is called peer-to-peer lending, and it often takes place via an internet business whose main purpose is matching up borrowers and lenders. When it comes to peer-to-peer lending services, services like Lending Club are both straightforward to use and trustworthy. Lending Club allows its investors to automate their investments based on predetermined criteria. Alternately, you might invest on your own by perusing the offered loans and selecting the ones that appeal to you. You decide. As with any other kind of investment, It's important to choose ones that are compatible with your comfort level and risk tolerance. Thankfully, peer-to-peer lending websites usually make it clear what the risk profile of each borrower is and what you, as the lender, can expect. Number 6. Invest in a college fund or your children's future. If you're a parent, your number one goal should be for your child to thrive under your care, and receiving a great education is one of the best ways to do just that. But there's a catch. The rising cost of higher education shows no signs of slowing. College costs have increased annually by 5.2% on average over the last 2 decades. This is twice the historical rate of inflation. If you want your children to attend college, but you aren't exactly flush with cash right now, you should definitely start putting money away. Investing in a 529 college savings plan is a smart move because of the tax benefits it provides. Examine your state's 529 college savings plan to see whether it makes sense for you and your family. Putting $1,000 into one of these plans is a wonderful way to get your child's future off to a bright start. A lot of parents end up stressing about how their child will afford higher education as they approach 18. But if you make the choice to begin saving for college when they are much younger, you'll find there will be far fewer mental hurdles to deal with down the road. Number 7. Options and Forex trading. To put it in simple terms, options trading involves buying and selling options contracts on public exchanges like the S&P 500, and broadly speaking, it's a lot like stock trading. While Forex, or foreign exchange, is the trading of currencies, such as trading euros for US dollars. When it comes to financial commitments of $1,000, there's a wide chasm between can and should. Yes, you can create an online options or Forex trading account with only $1,000, and such accounts do provide opportunities to leverage your initial investment so that you can earn rapid profits. But should you? Being able to do something isn't always an endorsement of doing so. When compared to other investing alternatives, Forex and options trading provide the most risk and the greatest potential for financial success or complete ruin. Of course, there are a lot of people who can take $1,000 and, using their knowledge of various trading tactics, generate substantial profits while limiting their losses. But while learning the ropes, many of these traders have probably lost $1,000 or more. If you're going to risk your money in options or Forex, at least practice with virtual funds first. So there you have it, 7 different strategies to invest $1,000. You may have been hesitant to invest in the past if you didn't think you had enough money, but ETFs, CDs, IRAs, and even options trading can all be approached with funds as little as $1,000. If you found this video interesting or helpful, leave a comment below. We'd love to hear from you. Please like and consider subscribing so you never miss out on new content. Thanks for watching. Until next time.